Yes. No, I think the latter point is correct, which is to say that the new fund, the Fund 3, really is to try to establish the total supply chain of semiconductor chips in China. Because in the end, right, the digital war between US and China is about the chip war, because the semiconductor chips power all different sectors of the economy, especially in the future AI economy. To China, in Chinese term, a semiconductor is referred to as a neck choking technology, meaning, as we talked about already, that the U.S. may have power to sanction, to impose export controls, right, to limit a Chinese company's access to such technologies, right? So in order to solve this neck choking, China needs to develop its own semiconductor supply chain, from every aspect of the value chain. So to your question, the Fund 3 will focus on establish the total supply chain. Now, for Fund 1 and Fund 2, they put a lot of focuses on the equipment and materials related areas. And now, because it's established in the middle of the AI boom, I believe they will put more emphasis on advanced computing chips and memory chips for future AI.
Yeah, I suppose there's also two things going on here, and this is largely consistent with that. And that is, one, China is pretty desperate to attract foreign investment back into the country. You've had Li Qiang just this week in Seoul saying, hey, we welcome the likes of Samsung to keep pouring money in. But at the same time, there's this campaign at the moment and this so-called Document 79 that's been circulating amongst Communist Party members about trying to wean themselves off foreign technology and replace it with domestic alternatives. And perhaps that speaks to what you're talking about, to try to secure these supply chains domestically. So as a foreign investor, how do you take part in that? I mean, is this story convincing enough? Try to help us sort of join the dots here.
I think it's a great you put these two things together, right? On one hand, China definitely wants to develop a domestic supply chain, but at the same time, it wants to engage the global markets, not only because of the capital, but also the technology of semiconductors is so complex that you cannot simply just develop it out of like one market, right? So the Samsung example is very relevant. Think about it. Whether you like it or not, China is still the largest semiconductor market. Meaning China's biggest import every year is semiconductor. So for foreign semiconductor companies, right? China represents a big competitor, but at the same time, it also represents the largest consumer. And at the same time, looking at the semiconductor fund that we're talking about right now, right? There's also quite a bit of capital there, and for very expensive R&D in semiconductor sectors, even for deep pocket like Samsung may find that capital collaboration could be relevant.